So hi guys, welcome back to another learning tutorial. In this specific video, I'm going to share with you how I journal my trades, the process that I use. So it's more or less, I'm also going to share with you the link with the template that I use, because looking at some of the YouTube comments that we normally get, you guys have been asking for this, and I decided instead of just sharing the link, let me share the link through a video where I show you how to use the link, because it's one thing to have the link and then it's another how to learn how to use it. Now, the first things that I'll say, I think disclaimers is one, just take the template. Don't try and do what I do. Don't take my first signal to be your first signal or your second signal to be my second signal. No, instead try and just create your own signals, create your own edge, but you can use my template. You can learn from what I'm doing, and then you can, and that's what I'll try and explain to you. Why am I tracking certain data points, and why don't I track other data points? So I'll share with you this one specifically. So this is the template that I use. So you can see that it's written currency pair 8. So when I'm taking a trade, for example, if I'm taking a GBP USD long, or like this trade that was here, which was a USD card short, what I'll normally do is I'll write trade number 1 if it's my first trade for the month. So I'll just key in trade number 1, trade 1, and I'll just key in first it's a USD card shorts. The reason for me tracking which asset I'm trading and whether it's long or shorts, because I want to understand, do I do better on some pairs? Do I do better when I'm going long or shorts? And does that have correlations with how markets are moving? If, for example, we were in a bull market between, like gold right now is in a very significant bull market between April up to now, I would want to know, did my shorts on gold work well because I was betting against the trend? Did my longs work better because I was betting with the trend? So that's what I'm trying to look for. Then the next thing that is I have the time frame where I take the before and after shots. So remember, we're doing both technical and fundamental analysis. For me, technical is more important. Fundamentals just drive why and where the prices are going. So I'll write down the date and time of entry. Okay, why do I track the date and time of entry? For example, between January and March, I observed that I was losing money on Mondays and making money between Wednesday and Friday. Reason for that being, on Mondays you'd often get the wrong move or the false move, showing that the markets are probably likely to move this way. Then on Tuesday, Wednesday, Thursday, we'd get the continuation of the trend, and I'm most likely trying to follow the trend. That's what I do on a day-to-day basis. That's my philosophy in trading. Identify a trend and follow it until it bends. So date and time of entry was 22nd November for this one, 7 p.m. So you can see I'm also tracking the time. I want to understand, am I trading well? So I normally trade London and New York session. I don't do Asia, I don't do Australia often, rarely. I don't think the whole of this year I've executed any trade outside London and New York. But of the two, I do better in New York. So I also want to track New York. And during New York, I also want to understand, is it at the open, the first hour after the open, 2 hours into it, as it comes to an end? That's how I'm tracking the time. Then I'll have the daily chart screenshot, which tells me the pattern that I was trying to look for on the daily chart, and then I'll have the 4-hour chart screenshot, which is my execution time frame. So for example, for this one, I was looking for a move from 1.375 on the daily chart. This is how it looked. I was looking for this move to continue on the downside. And then if you go down on the 4-hour time frame, we had this beautiful first, second, third trend line bounce, which I was looking for the markets to continue moving lower from the 1.3750 level. And you can see I also note down my thought process. I executed a short position in USD CAD after spotting this. After this, I was patiently waiting for this. Okay, so that's my thought process for our journal. Then I have a checklist. Okay, my checklist basically deals with which pairs am I trading. So I have my pairs there. What is my first signal? Was it evident? Okay. What was my second signal? Was it evident? What was my third signal? Was it evident? So if you're going to use it, then you also need to tell me what your signals are. Then I have a fourth and a fifth signal. And then I have what is your risk-reward ratio. For me, I don't take trades which have risk-reward ratios of less than 1:2. I believe I need to double my money on each trade that I'm making if I'll be right. And probably if I'll be wrong, I need to lose a percentage. Then what is the entry trigger? Did I just go in because I loved the idea, or did markets tell me now it's time to come in? There's a difference between having an idea and markets telling you now get in or now execute. Then my timing of the trade, London or New York. Was this trade planned? I normally do my research and planning and analysis before I take a trade. So Every weekend I must take some time to observe what markets are doing, pre-plan how I'm going to be trading, and that's what I did specifically with this any trade. Every week I'll do that, and I think that's also a process that I can share with you, how I prepare for my trading week. I think I'll do a video on that. So that was my entry trigger. Then you had the risk. How much risk am I willing to take? The fundamentals. So like this week, probably there's inflation coming in the US today at 3:30. So I'll tick in that one. Then my mental state. Remember, trading is a merging between two things. There's the markets and then there's you as an individual. Markets could be good, you as an individual could be in the wrong mental state. You could be in the right mental state, markets could be bad. So you need to understand the fusion of the two. And for me, I like knowing, am I in the right mental state? Am I confident enough about the trade? Am I following my plan? Did I journal my entry? Did I journal my exit? Did I accept the risk I'm taking? And did I execute well? So I'll do that checklist. And then after that, I have an emotions worksheet. So the emotions worksheet is there for me to be able to track my mental state as I'm in a trade. Remember, your mental state changes as the market is moving. Okay. For example, if you enter and it starts going into profit, you start feeling nice. Okay. If you enter, it starts going into loss, you start feeling bad. You're a human being, and there's evidence that human beings will definitely go through those cycles. As much as you're detached from a position, you will also have those cycles, and it's important now for you to be able to see how they affect your behavior. Okay, so that's why I have the situation. So for example, if I enter the trade, it starts moving to my side, that will be the situation. Now the thoughts, as it's moving to my side, do I think it's likely to keep moving higher? If the answer is yes, I'll key that one in. Then how am I feeling? Am I feeling anxious? Am I feeling confident? Am I feeling relaxed, calm, chilled, in a state of panic, in a state of awe? What am I feeling? What actions am I taking based on my thoughts, feelings, and the situations that I am in? And then what are the results or the consequences of the action? So this helps you identify your cognitive, behavioral, and emotional patterns, which are very, very critical if you're going to be making money in the markets again. Because you need to understand, for example, like for me, I learned using this that my emotional patterns could, once I have 3 or 4 losing trades in a row, there's a high chance I'm going to start becoming emotional. And once I spotted that pattern, it was very easy for me to realize that after certain losses, I need to take a break from the markets. Even if it's a 2-3 day break before I come back, because it's starting to get into my head, and I'm likely to trade from my emotions rather than from my cognitive ability, or rather from the market's perspectives. Then I have trade management. So you can see my journal is more or less like work. So part of my work in trading is mental preparation. Then during the trade, there is this. And then there is the after, which is I'll review now what I was thinking before during the trade. And then after now, I have clarity of mind. I'll be able to look at markets, what I did, and what I can learn from that relationship between those two things. Then I have trade management. So I have rules or checklists for me to manage trades. Have they attained my TP or stop loss? If yes, yes. If no, why? Are you following your trading management rules? So I have rules for managing my trades, which means if I've doubled the risk that I initially took, I'm allowed to get out. If markets are trading at significant levels and I'm spotting the probability of reversals, I'm allowed to get out. But I also track my emotional patterns again. I want to see, am I exiting because I'm scared or anxious? And then am I making an impulsive decision? Probably I had 3 trades, 2 have not worked. Am I bringing that baggage and damage to these new positions that I have? So I'll also track that. And then have I attained my weekly monetary targets? By the end of the day, it's a money game, and you must have targets for how much money you want to make. Not specifically so that you can strike them, but sometimes when you're trading in the markets, probably like you'll find probably you have 6,000 running profit or $3,000 running profit. And sometimes you need to ask yourself, is this enough money for a week or for a trade? Because if it's enough, why would you be there and you think there's a probability markets will come down? So I also love looking at that. It's an idea that I learned from a great psychologist called Ari Kiv, who does work with hedge funds. And it was very, very intriguing to me. How many traders just trade and they don't think about, do you have a monetary target? Like for example, and you'll realize very quickly that your mind is not good for trading, for example, because at some point you might think $2,000 per week is good money. But then once you get to 2,000, your head will quickly jump to 6,000 is good. Then from 6, it will be 10. Then from 10, it will be 20. So you need to at least be realistic, aim higher, yes, because you can't be contented with where you are forever. You need to also be growing. That's the process of growing as a human being. But again, you also need to track and understand, what is going on. Then I have here where I track my accounts, to see the different accounts that I have and where they are trading. So that one is not really important for you guys because someone might not really be interested in that. So I'll actually even scrap this off as I'll be sharing with you. I think what is important to you is what is up there, from trade management, emotions worksheet, exits, entries, win and loss. And I think that's generally how I journal trades. Most of my trades must, not most, all of my trades must go through that process. And that's how I've been able to understand my patterns and understand where I'm making money, where I'm losing money, what to work on, what not to work on. So this was just the first video, how to journal. I'll probably come up with another video, how to do a journal review, and then another one on how to prepare. I think those two videos will also be coming in as I'll be sharing with you my trading process. So I think we can stop there for today. We'll catch up on the next video. And if you're interested in learning how to trade, if you're interested in, prop farms, like you can see we're doing prop farms big time, feel free to visit us, reach out to us, and we can help you in both fronts because you have some experience in both fronts, and we think our experience can at least highlight to you what to pay attention to and what to avoid. So I think with that said, I'll stop there and we'll catch up next time. Peace.